Hey guys, welcome back to another video. In this video, I'll be talking about the genius of Donald Trump. Okay, I don't really confirm this what he's thinking because he didn't tell me this was what he's thinking. But I've been, let's just say, researching and I've been doing my own homework, and I found out a few people saying different things about this recent trade war and tariffs, and I realized that if what they're saying are true, Donald Trump might be on to something, and it might just be genius. And I myself, I'm gonna make a video of this as in a way of myself learning and sharing what I've learned to the world in the most simple ways possible with my words instead of the complex words. So if you want to know, I'm going to break it down into 5 different points that are simple enough to understand, which took me quite a while to understand. So I hope you enjoy this video. Let's get into it. And now to my first point, which is tariffs are not what you think. So recently when Mexico and Canada, they were threatened with the tariffs, and then they cope to what the US is demanding, and they eventually have a 30-day delay. Many people are saying that if this tariffs was actually imposed on Mexico and Canada, it's actually bad for the economy because it is going to create inflation and it's going to create all those instabilities in the economy. However, actually, right, true inflation only comes from the government printing money, and that's the only way true inflation can come. I'm not saying that prices don't fluctuate if the government don't print money, but the real source of rising inflation is from that. And also, there's also proof in 2018 when Donald Trump actually also put tariffs on other countries at the time, and actually end up making the US economy better than it is, and also lower prices of some stuff. So actually, tariffs are not the source of inflation, even though I know in the past video I have said that tariffs could be possibly the cause of inflation. However, that's actually not the case. Well, it shouldn't be the case. And it was proven in 2018 when Donald Trump was actually president. So right now, tariffs are not actually the problem. However, they might actually be the solution. And let me elaborate. And now to my second point. But before we get into why the tariffs are good, let's talk about the real problem here, which is the Triffin Dilemma. So the Triffin Dilemma is named after a guy a long time ago, which also has the last name Triffin. However, let's just skip that part because it is interesting but not too interesting to grasp your attention and remember his name. So basically what this is that he realized something, which is a problem about the reserve currency. Yes, the reserve currency is very powerful and it keeps the US in charge. However, what's the problem with the reserve currency? The problem about the reserve currency is that it is going, it will be stuck in a loop, a bad loop for the US. Because in order to become the world reserve currency, they always have to produce more US dollars to keep the world as it is and keeping everyone to use the US dollars. However, in order to do this, they have to consistently print more money. So what's this called? It's going to be called the trade deficit. Printing more money is not called a trade deficit, but what they're doing is trade deficit. Basically, they're going to import more than they export, buying from people and paying with dollars so that more dollars go out there and become the reserve currency. That means that they export less, means they consistently earn less, and they have to print more money to the world so that the world will still use the US dollars, even though they consistently import more than they export. So this is the bad thing, because the more they print, the more the US dollars become weaker, and the more the world do not rely on the US dollars, or they start doubting the power of the US dollars, which would cause them to find alternatives possibly from other countries like the BRICS alliance or so on. So this is the current situation that they're facing, which is also a problem. And now to my third point, which is the self-feeding cycle of the trade deficit. So the trade deficit is not just about balancing import and export, it is also about global liquidity, maintaining the global liquidity in balance. So what is the loop exactly in simple terms? The simple terms, right, it is that when US gets a lot of imports and they send US dollars outside, the countries tend to buy and reinvest the money inside the US dollars, inside the US. So basically the money comes back into the US, which makes them ends up, which other countries will invest in their assets, their bonds, which also ends up making them have more borrowing, meaning they have more debts. And with the high interest rates, it's going to cause them to make, the high interest rate currently is going to make them pay back even harder because it's going to be expensive, put it that way. And when that happens, they will have to increase taxes, which never sits well with US people. I mean, what country enjoys taxes from this? What country has citizens that enjoy paying taxes other than countries that actually are innovative, right? Like Singapore. But the point is, it is bad for them because they're going to increase more debts and their dollar is going to become weaker. And this is a loop that has been going on for the longest time because they are the reserve currency, and this is the loop they have to go through over and over and over again. And now to my fourth point, which is the Plaza Accord 2.0. So this is an interesting name, but don't pay attention to the name, just pay attention to what this means. So basically the Plaza Accord is a replication of, the Plaza Accord 2.0 is a replication of the Plaza Accord in 1985, which included the US, Japan, Germany, France, and UK, when they come together to weaken the dollar. So why would they do that? To reset the economy, to throw US out of this loop, making their reserve currency at first at risk, but then remained stable. So they're trying to replicate the effect. They're not trying to make another currency much stronger than the US dollar, but they're trying to make the US dollar weaker. How they're doing this? With tariffs. So what Donald Trump is trying to do is that they're trying to apply pressure to tariffs, so it's actually more expensive for you to sell to them. With this, right, they might have lesser US dollars out there, right? And with this, the US products can start being more competitive inside the economy again by exporting more and also stable. So now they're not just importing more, they're also exporting a lot. In this way, they're more competitive, making them more stabilized between their exports and imports, which throws them back into the game, right? Which in a way they can break the loop. And this is going to be good for them because they don't want to be forever trapped in a loop where they're going to wait until the US dollars become weak, right? However, the interest rate is actually in the way of their plan. Because interest rate, it's a magnet. It's a magnet for the whole world to start investing in the US bonds and put the money back into the US because interest rate is high, right? Because interest rate is high, everyone invests money inside the US. But this makes their plan hurt because when a lot of people invest money inside the US, it strengthens the dollar. And when it strengthens the dollar, it ruins the plan. But Jerome Powell will not back down to Donald Trump because his legacy is to stop the inflation. He doesn't really care about Donald Trump's strategical move to trying to create a better economy in the long run for the US. Well, that's one problem. But now you see Donald Trump's plan, which in my opinion is actually very genius. Because in this way, they're going to come back more competitive and more relevant inside the US. And they're also coming back with in a way where they'll lessen their increase in debts. So that's great. And on my fifth point, which is asset market and its effect on a weaker dollar. So let's just say if this Plaza Accord 2.0 happens and it goes completely according to plan, right? This is going to be great news for everything but the dollar. Let's put it this way. Stock markets are going to increase based on past experience. With a weaker dollar, they're going to find alternatives. They're going to invest in they're going to invest in stocks, and export type companies like Apple and Tesla. They're going to significantly be beneficial from this, and alternatives like Bitcoin are going to do great because now that the weakened dollar is happening, they're going to find alternatives, right? So Bitcoin, gold, these assets that preserves the value of money or even increase the value of money would increase in valuation because more people are going to invest in it, right? Because now they don't want to put their money in the US dollars. Not just that, real estate could also improve because now that once it happens, right, the interest rate is going to be lower, and by then a lot of people is going to the economy is going to be stimulated by lower interest rates. More people is going to buy real estate as well because borrowing is now cheaper. So everything's going to improve. US economy is also going to improve except for the US dollar. And let's just say this right now, if you put your money inside US dollar in the long term, because during this process, right, it's going to cause you to end up having your money devalue because of the coming inflation. Let's just face it, it's going to be inflation during this reset as well. And well, everything's actually going to be great for the US for once if this plan goes through, which in my opinion, this is why I think it's a genius plan. However, I'm not alive long enough to see whether it's going to 100% work out the way it is, but the way it sounds is it's very smart. And with Elon Musk working on cutting all those departments to cut costs, well, let's just say the US is actually heading into a pretty good direction in the long run. However, in the short run, many people are going to feel like it's going to be very painful, and some people are going to think that it's very stupid to cut so many things as well. But in the long run, these tariffs, even though it could have risk of damaging friendship between other countries, let's just say it would throw them out of a loop, and it will also make the economy better. So I'd say that's a win. So in conclusion, Donald J. Trump is trying to make the US come out of a loop from the trade deficit, which for many years he liked to say that other countries take advantage of them, even though he knows very well that the reserve currency is the reason why that the trade deficit happens, and the US always have to end up with more imports and export. He's gonna get thrown out of this loop, and they'll get to have a better economy because of it, because they become more competitive now, and the alternatives like stock market, real estate, gold, Bitcoin, they're gonna soar if these plans go through. Okay, this is not 100%. Do your own research if you want to commit to this. It's not my fault. I'm just sharing what I've learned. However, if this plan goes through, all of this is going to improve. All of this is gonna skyrocket, and everything. And the American economy is gonna be better than ever. So that's the conclusion. It's actually a very interesting thing that I've learned recently, and when I learned it, I was very intrigued by this information, thinking that, wow, actually the economy can be played in such a complex level. Anyways, that's the end of this video. I hope you enjoy it. I hope you like and subscribe. I hope you come back and watch the next one. We'll see you in the next one. Bye.